Good morning, everyone. I think it's been 5 or 6 years since I joined my first ERA event, and as Liviu said back then, I was in the banking sector and dealt with financial crime in general, from fraud and corruption to money laundering, and it's been a very fruitful journey to see things happening from the financial institution's perspective, but also from consulting perspective. When you're with a financial institution, your aim is to make sure that the assets of that particular financial institutions are protected and preserved. When you're in consulting, you're basically coming across various problems, and your aim is to advise clients in how to build stronger resilience and how to investigate and apply the best and better international practices. As Liviu mentioned, I'm leading the financial crime advisory practice of PricewaterhouseCoopers across the Central and Eastern European cluster, and that covers 29 countries from Poland and the Baltics, former Yugoslavian countries, Romania, Bulgaria, Moldova, Russia, and the CIS, former CIS countries. So basically it's a very widespread geographical area. Nevertheless, I'm part of the EMEA and the Global Financial Crime Network, which gives me access to not only to situations but also experts, and I'm seeing the financial crime phenomenon from various angles. Prior to that, I was with, as Liviu mentioned, with Deloitte doing similar things. And before that, I was with UniCredit, G Capital, Eurobank Ergasia, so with a number of financial institutions. Again, it was an amazing journey. Thank you very much, ERA, for constantly inviting me. And I'm hoping that for the ones that have seen me discussing about corruption and money laundering and so on, they think like this is a very broad coverage area. I've had the luxury of dealing with such things over the years, and I've seen them evolving, and I've seen organizations facing multiple challenges, and I've seen organizations building stronger resilience to various financial crime risks. Our program for today is structured in several chapters, if you want, but I guess the main outcomes and outlines of what I'm about to say today are built around defining the context, and I'm sure that you've heard lots of things yesterday. We do have our own studies and research that outline the exposure that organizations, and particularly financial institutions, and you will see why, are exposed to. Then I picked, I was actually thinking, I've been dealing with, cyber threats, and I've been dealing with fraud and cyber fraud and so on and so forth for the past probably 12 to 15 years, if I count my early life. But the idea is that when I was thinking about presenting some of the case studies, I was actually aiming to outline a global concern. And I picked some of the high-profile cases, and by virtue of having access to some of the external parties that have worked in investigating those cases, as they are our partners as well, I've had access to the outcomes and the lessons learned out of those cases. So basically today we're going to discuss about the global payment fraud and the so-called SWIFT fraud, or the SWIFT cases. As mentioned, the lessons learned. Nevertheless, I'll bring to your attention some of the developments of the central supervision authorities. Again, I'm lucky enough to work with central banks and financial supervision authorities in building a macro resilience to such events. And once we will close the chapter, we will move into how financial institutions should better prepare themselves to face cyber threats. And actually what I've observed in, looking at how financial institutions should build this cyber resilience, I come across common pillars and let's just say outlines that are applicable across the financial crime spectrum, from fraud and corruption to money laundering and sanctions. The principles are out there. I'm going to talk about some of them and the maturity evaluation of these institutions. Last but not least, I'll talk about the convergence between cyber and fraud. And I think there are two angles there. I'm going to talk about the convergence between crimes, and I'm going to talk about the convergence between how the regulators approach or started to approach or should approach the convergence between regulations when it comes to cyber, money laundering, fraud and corruption. As mentioned, in order for us to understand the context and the position and the recent developments, we have to bear in mind that financial crime has multiple facets. Institutions cannot remain ignorant to the convergence between them, as I've mentioned, when protecting their assets, and regulators should regard them as being, again, convergent. When we refer to financial crime, our recent studies do demonstrate that there is basically no industry and no process that is immune to financial and economic crime. And I'm always being challenged with the fact that financial crime only relates to financial institutions. Obviously, we're seeing more and more, let's say, concerns from that space, from financial services and financial institutions. Nevertheless, financial crime and economic crime are across industries. And I've had cases when manufacturing companies have been exposed to money laundering schemes by having insiders, and I've seen pharmaceutical companies that have started to build a resilience to sanctions by starting to screen before the payments have reached to the banks names and vendors and customers. So basically, it's not necessarily a financial services concern or main concern, but I guess financial crime, what I'm trying to say is that financial crime is that crime that is not violent and that carries a financial loss with it. Needless to say that financial services still have the biggest, let's just say, challenge, as half of the respondents to our recent studies demonstrate that financial institutions have had challenges in the financial crime space. Now, where does cyber fit into that picture? The digital technology continues to transform and disrupt the world of business, exposing organizations to both opportunities and threats. So it's hardly surprising that cybercrime continues to escalate, ranking in our recent studies as second most reported economic crime. So this is a growing concern. Now, the reality is that, like every other aspect of commerce, economic crime has, to some extent, gone digital. So in a hyper-connected business ecosystem that frequently straddles jurisdictions, a breach in any node of that system, and we will see when we will be discussing about the specific cases, including third parties such as service providers, business partners, or government authorities, can compromise organizations. So it's not necessarily enough to build resilience within your own institutions. That has to be a wider, let's just say, concern, a wider cooperation in dealing with cyber. Now, what's more, cyber risk now encompasses more than our traditional view of computers. And we've observed a sharp increase in attack activity involving the so-called Internet of Things. Everything is connected and related to Internet nowadays. So basically, we're exposing the way that we're doing business I'm going to give you a very simple and practical example. I'm not sure that if we will have the time when I'm going to explain the Swift fraud, how easy it is to identify and impersonate a Swift administrator user. I'm going to show you in a very brief sentence how you can identify who is a Swift administrator and try to impersonate that user and try to gain access to a Swift server. Now, here's the digital paradox. Organizations today are able to cover more ground more quickly than ever before, thanks to new digital connections, tools, and platforms which can connect them in real time with customers, suppliers, and partners. Yet at the same time, cybercrime has become a powerful countervailing force that's limiting that potential. A boundless threat, and business leaders worries it's holding them back. So you will see some of the studies and some of our observations show that almost half of the organizations do not know what to do when dealing with cybercrime. Now, recent studies also demonstrate that 6 in 10 chief executive officers ranked cyber threats and the speed of technological change as top threats to growth. This year's study that I'm referring to points that the distinguishing fact that too many organizations are leaving first response to their IT teams, which we will show when we're going to talk about the maturity assessment, that this is not necessarily the future of responding and dealing with cyber threats. What's more, the composition of these response teams is often fundamentally flawed, which ultimately affects the handling of breaches. With all due respect for my IT security professionals, but when it comes to intelligence, when it comes to identification of the hidden threats, when it comes to performing a comprehensive risk assessment, which I'm going to talk about later on, when it comes to responding to cyber threats and having a plan in place, they should not be the ultimate responsibles. They should be part of that process. What's more, from our firm-wide work on digital strategy and execution, as I've mentioned, I'm part of the global network. With thousands of companies, we've identified practices that distinguish leaders in the digital age. And I'm going to show you some of the maturity assessment outcomes, if you want, when it comes to financial institutions. Chief amongst this is a proactive stance when it comes to cybersecurity and privacy. The necessities that everyone in the organization, from the board to the C-suite to middle management and hourly workers, see it as their responsibility. I had, again, the luxury of being part of various financial institutions and financial services companies, and one of them had 3,000 employees, and I always said that, you know, I have 3,000 financial crime fighters, and people were wondering how. Well, if you don't have the first line of defense, if you don't connect with your second line of defense, if you don't train your third line of defense and the fourth line of defense in identifying and working with you as a central unit, you will never be able to cover the risks. Needless to mention that because every financial crime event has a human component, you won't be able to cover a one-to-one, never, ever. So you have to build a stronger resilience plan, you have to think about analytics, you have to take into consideration technologies, and you have to work and train your people to be able to spot, work, and recognize cyber and financial crime in general. As I've mentioned before, financial services still rank as the main industry that is hit by cyber events. Nevertheless, the position has not grown exponentially in the recent years, so financial services still have ranked as the main industry for the past few years, with an incremental increase in our recent studies. Now, to summarize our conclusions, cyber threats have been increasing over the past few years. Now, it evolved to a point where one could segment it into distinct categories. And as I've mentioned, some of the cases that we're going to discuss today are related to a global new cyber fraud, if you want. So the first one is the kind that steal money and bruise reputation, and the kind that steal IP and lays waste to an entire business. So the first one is the cyber fraud, which is a monetizable cybercrime such as identity and payment card fraud, which I believe you discussed yesterday about. And these are the events that tend to grab the headlines with millions of dollars of losses and many victims. Now, the second one is the transfer of wealth and IP attacks. And the more critical economic crime facing organizations is that of international cyber espionage. Although I'm not going to discuss about that today, I'm happy to share with you, and I actually thought about it, Liviu, one of our recent governmental studies when we've actually helped, as a company, I haven't been part of that project. I wish I have, but I'm probably not that smart. But we've worked to deter Chinese cyber espionage. So it's a fantastic operation where we've worked with governmental authorities to tackle cyber espionage. The study is simply breathtaking because it describes the very steps of our cooperation with the governmental bodies. So if you want, you can attach that to it. I think it's a very nice lecture. I've also published it on LinkedIn. It's amazing to understand how things evolve in the background and how organizations are exposed. Now, 6 in 10 chief executive ranked cyber threats and the speed of technological change as top threats to growth. Now, detection and investigation and the convergence between crimes. One of the things that I'm going to discuss today is that some of these big cyber frauds, one of them, I think, close to 100 million euros, could have been detected by having or actually monitoring or actually responding to certain money laundering indicators. So you see, you have a cyber situation when there was a breach, and then you have high volume transactions, accounts without activity, and so on and so forth that could have been detected if you would have had a proper money laundering system and program in place. So there is a convergence there, and apparently less than 4 organizations out of 10 have a cyber incident response. Now, in building resilience, most financial institutions are still not adequately prepared for or even understand the risks faced, and the makeup of this team varies widely. So as I've mentioned, organizations still refer to, I have an IT security in place, I'm protected, I have my cyber incident response, if you want, on paper. Supervision bodies are not necessarily prepared to challenge the plans that are in place. So basically you end up not knowing what to do, and you encounter high reputational and financial losses as a financial institution. As I mentioned, I'm going to discuss about 2 recent cases, which we will refer to as global payment fraud, the lessons learned, and some of the recent development when it comes to central supervisory bodies in building a stronger resilience and implementing a macro assessment of how the institutions that they are looking after are responding and tackling such events. On multiple occasions, back in 2016, hackers modified the SWIFT Alliance Access software, the SAA, used by financial institutions and other organizations to access the SWIFT global payments network. I'll just mention that it's needless to say what SWIFT is. the hackers created malware that both created fraudulent transactions and hid evidence of their activity by modifying confirmation details. Now, according to Swift, in both instances, the hackers exploited vulnerabilities in banked funds, transfer initiation environments prior to messages being sent over Swift. The attackers, and Swift said that the attackers clearly exhibit a deep and sophisticated knowledge of specific operational controls within the target banks, knowledge that may have been gained from malicious insiders or cyber attacks or a combination of both. We do believe that it was not necessarily an insider. It was a well-thought and well-prepared event, and you will see how that's been executed. Is everyone familiar with this event, the Swift fraud? Now, the recent attacks have resulted in increased concern from financial institutions, corporations, and regulators alike, galvanizing the industry to review existing security infrastructure that connects organizations to the Swift network. Now, risks have been identified by many organizations who use reactive fraud detection systems that rely on analyzing audit log data rather than real-time network activity. So this was the first risk that has been identified, the first lesson learned when organizations started to think how they can be exploited. The second is that they cannot identify emerging threats because their detection methods and data are limited. I would say that organizations do not necessarily always take data into consideration and do not leverage the data that they have access to, and they lack the ability to intervene and block transactions. Now, basically what has happened in this case is that attackers gain access and installed malware. Then the malware decrypted the configuration files containing search terms to scan within the Swift messages. I'm going to give you another practical example. One of the things that we're doing in the sanctions space, is everyone familiar with sanctions and the fact that financial institutions need to have their own filtering systems in place to detect terrorists and embargoes? Now, obviously, you need to screen your messages for sanction terms. So what we're doing, we're testing these filters by creating our own Swift and SEPA messages or whatever wires that replicate the format because, for example, Swift is publishing the format and for financial institutions to be able to cope with the changes in the network. So we're infecting such messages, we're sending them to the filter, and we're getting back the results to measure the effectiveness. Now that's an easy thing to do, and we know how to replicate Swift and SEPA messages and any other message format. So this was not a difficult thing to do. Now the malware identifies and exploits host Swift application to bypass validity check within the Oracle DLL. Well, if you go on LinkedIn now and you choose one bank, whatever bank, and you type in Swift administrator and the name of the bank, see what you get. Now, it's easy because on the bank's website you may have contact details of salespeople, so you do understand that is like, for example, liviu.chirita@unicredit.eu. That would be simple thing to understand if adrian.popescu@unicredit.eu, which is a Swift administrator, and you're done. You already have the first step to be able to bypass one user. So in Bangladesh, it's unlikely that the Bank of Bangladesh had any flaws in their infrastructure, whether they've been backdoored. Now the Swift financial application messages are now monitored and intercepted by the malware. The Swift messages are sent to attacker printers and printed in real time. The PRC and the file files are scanned for attacker-defined terms. Messages that contain attacker-defined terms will be used to form SQL statements to query convertible currency availability and then update transfer amounts. And the last step would be the checks login, logout status of the journal table every hour and sends results to attacker domain over HTTP. So it was not sophisticated, but I guess the most important things are the timelines and the times and the time period when attackers have chosen to perpetrate this fraud. Now, in the case of the Bank of Bangladesh, and actually BAE Systems that was involved in the investigations, and proudly say that we have a partnership with BAE Systems, and actually the governmental study that I've mentioned on Chinese cyber espionage has also been performed with BAE Systems, said that if Hollywood releases another iteration of Ocean 11 franchise, they should base it on the recent attacks. In the case of the Bank of Bangladesh, the cyber crooks used to cover the Chinese New Year, which is a highly gambling period. Large money flows for high rollers normal, and bank staff are obviously on leave. Important, what you don't see in my slide, that in May, 1 year before, four accounts were opened at Rizal Commercial Banking Corporation in Philippines. Now, on the 24th of January, so you see May to January, it's already almost 8 months, a suspicious login was made. On the 29th of January, attackers installed the Sysmon on Swift Life. On the 1st of February, account opened at the Rizal Commercial Banking Corporation using identity of a businessman. Then the attackers have executed the SWIFT transfer to accounts in Sri Lanka and Philippines. The Bank of Bangladesh noticed issues with printer system in secure transaction room. The Bank of Bangladesh noticed a SWIFT error. A file is missing or changed, and that was the actual error. The Bank of Bangladesh regained access, find messages from the US Federal Reserve querying transactions, last activity on the network from the attackers, all these things in the same day, on the 6th of February. Then on the 7th of February, start of working week in Bangladesh. On the 8th of February, obviously the Chinese New Year. On the same 8th of February, the Bank of Bangladesh issued stop orders to the US Federal Reserve and the Rizal Commercial Banking Corporation and other banks in the US and Sri Lanka. The Bank of Bangladesh contacted Philippine Central Bank requesting assistance on the 11th of February. On the 29th of February, the Philippine authorities freeze 4 accounts at the Rizal Commercial Banking Corporation. So in May, they opened the accounts and they started the activity in January. No one spotted that. No one. And it could have been so simple to detect, and I'm going to talk about the money laundering angle to this. It could have been easily spotted. Accounts without activity. I had cyber frauds that I've investigated, and obviously smallish cases, hundreds of thousands, but the idea was that an organized crime group had insiders in my bank, and one gentleman has provided information about the dormant accounts. Now, what we had wrong at that point was that in the sales network, they have communicated in larger reports the dormant accounts without necessarily sending them to the owners and the relationship managers of those accounts. When you go to a bank and open an account, someone faces you, you face the relationship manager. Now, that's the person that should receive information about your account and be able to react if you don't use your account, because obviously by using your account, you generate fees and commissions and so on and so forth. So they should be concerned and should get a call like, what is happening? Especially when you deposit a few €100,000, which I wish you all will sooner or later, and nothing is happening. So you don't execute any transaction, you keep your money in the current account and so on and so forth. So those were accounts without activity. Now they gained access to these accounts and they've impersonated the owners of these accounts. And after 8 months of inactivity, they started to execute through online banking. They started to execute transactions. We didn't spot that. And it was actually my personal experience which has led to the modification of our internal users' behavior, and I'm going to talk about this in a second, monitoring scenarios and the way that we're using analytics to detect unusual activity. So in this case, it could have been detected. The goal of the attackers was to access the SWIFT network run by the Bangladesh bank and make transfer from accounts at the New York Federal Reserve to accounts set up by the criminals or their associates. Now, there are multiple interface options to SWIFT, but a central bank such as the Bank of Bangladesh, as I've mentioned earlier, would have likely had their own service installed and a dedicated environment. Making a transfer over the network doesn't necessarily require hacking SWIFT. So no one said that it was a SWIFT problem, only that the cyber criminals got access to the network, because the full access can be gained by compromising a SWIFT user or preferably multiple users. To do this, the attackers would have needed to gain access to the internal Bank of Bangladesh network. This would require use of malware to provide remote access behind the Bank of Bangladesh network firewalls, likely introduced with phishing emails, which is the oldest method in the world. Identifying staff that may have access to SWIFT is exactly as I've mentioned. Do your own research. Try to identify at least 5 SWIFT administrators by the time we finish our today's session. And I'm sure that you will be able to do that. As I mentioned, the Bank of Bangladesh, the attackers attempted to steal 951 million euros. This was done via 35 separate fraudulent transactions. 30 orders worth 850 million were stopped by the US Federal Reserve, but 5 orders summing up to $101 million went through. A further 20 million was blocked by a recipient bank for the organization in Sri Lanka due to a typo made by the attackers. So only a typo has led that bank to stop the transaction. The remaining 81 million was sent to 4 accounts at Rizal Commercial Banking Corporation. The accounts opened in May with activity in January. I think recently they've managed to recover 15 more million from the operator of the Philippines casinos. Now, obviously, they've coincided with the Chinese New Year, and an interesting twist surrounds the Rizal Commercial Banking Corporation, where 4 accounts had been set up in May 2015, as I've mentioned. The bank have denied responsibility, though their anti-money laundering practices have been clearly examined. And as I've mentioned, large transactions to newly opened accounts and large transactions to previously unused accounts would have led to the identification of a potential transfer. Another case that I had once, obviously it was not necessarily related to cyber, but it was related to the convergence between fraud and money laundering, was that in my recent years, I had people coming and repaying loans in cash, hundreds of thousands of euros with their banks in the bank. And I was not doing business in Congo, but with all the respect for Congo, but I'm thinking that the money laundering, let's say, environment is lower in there than in the country where I was doing business, and no one spotted that. No one's reported the suspicious activities, apart from the fact that they reported on cash transactions. So that was another lesson learned that could have led us to the identification of the underlying fraud that was committed still in our bank. Now, in Vietnam, the purpose was to also manipulate the SWIFT messages. So after they started the investigations of the Bank of Bangladesh SWIFT fraud, they've identified that there were attempts in Vietnam as well. However, this differs in the sense that it's designed to do so with messages stored in the PDF format. The Foxit reader, Trojan, even has an icon and file description that matches the legitimate software. And basically, the original PDF file is opened by the user. The Trojan reads the PDF, converts it into XML, identify transactions coming from specific banks, modify the transfer amount based on available funds balance. The Trojan reads the XML, converts it into PDF again. The pass modified PDF to authentic Foxit reader, and the user opens the modified PDF that has been already infected. So these were the outcomes of the Vietnam investigation. Now, when it comes to detection, the global payments fraud, I have a few examples of scenarios they can continue, like the impersonation of business users to detect unusual fraud precursor events of a non-financial nature, such as user activity after office hours. In one of my roles within a bank, what we were doing, we had there were called BNAs, and basically in order to get money from such a BNA by using your current account, you should have got a ticket from the teller. So we've seen and spotted activity after business hours by using an internal user's behavior monitoring system, and we were able to replicate the sessions, and there was a high degree of awareness implemented, if you want, through the fact that the user got a call from, let's just say, the intelligence team saying that, I know what you did last summer. I know that you've been doing this outside business hours. So this was a very simple and straightforward way of identifying whether the users may be tempted to manipulate the internal system. Now, impersonation of IT users, transactions from the core banking that has no direct user activity or file upload activity associated, correspondent bank abuse, and basically this was pretty much what happened in the Bank of Bangladesh. Suspicious behavior was indicated by transactions from emerging markets, banks on US dollar accounts from New York, sabotage against companies' payment processing infrastructure, where after the sabotage the money needs a way out of the system. Obviously this was also not monitored. Now, as I've mentioned, these things can and should be detected by using a proactive detection method, and there are a few technologies out there. However, my experience says that it's not enough to have the technology in place. You should understand the risks that you're facing. You should understand the environment and the way that you're doing business. So it's not, and the vendor will probably come with 200 scenarios and they would say you have to monitor this, because I've seen this in Vietnam and the Bank of Bangladesh, but you're doing business in Latvia. Now, in Latvia, following the recent Moldavian cases, there has been scrutiny and there has been, let's just say, growing concern from, for example, US institutions when it comes to correspondent banking. So in Latvia, the landscape has changed. And I picked Latvia because it was just a recent situation, and I'm also doing business in Moldova with the central bank. So basically, I'm very familiar with that situation. The point that I'm making is that in this particular case, you should understand as a Latvian bank the risks that you're exposed to by virtue of having different correspondent banking relationships, by virtue of being closer to, for example, a bigger, let's just say, portfolio of non-residents that are likely to abuse your systems. And I believe we have some Latvian guests as well, and I'm happy to comment further with them on that. But these things are happening around Europe. So a well-versed monitoring technology at least identify threats in real time, capturing all network traffic to analyze all user activities and messages traffic, and alert you to suspicious behavior. So this is fairly important, and it's fairly important that the people that are used to parameterize that system and this monitoring system are knowledgeable about the environment of that particular bank. So the isolated teams should not stay isolated, because you do not necessarily always, as a cyber fraud, let's just say, unit, you don't always have knowledge about all the infrastructure and so on and so forth. So you need to back up yourself with respective knowledge coming from other teams. Detects a wide array of threats by monitoring activity that includes location, device, and login frequency, and so on and so forth, and reduces investigations time and creates operating effectiveness. This is one of the things, again, I've had systems that after the implementation have started to issue thousands of alerts. So basically what you need to do as a financial institution is to look at the alerts and try to put some analytics, like further machine learning techniques and so on and so forth, on top of the rules to make sure that you don't always get, imagine, I'm jumping from one to another, imagine that you have a well-designed alert in your user's behavior monitoring system, but that alert produces, or that scenario produces thousands of alerts. So you start investigating, you don't have the people to cover thousands of alerts, and what you do, you're, let's just say, 1 week behind. Well, by the time you reach to that alert that should trigger that something wrong is happening and where you should react on real time, and because you haven't blocked those transactions or you haven't blocked those users in real time because you haven't dealt with the alert, that would create an additional risk. So basically you had your system for nothing. So what organizations are doing nowadays is to optimize their users' behavior and transaction monitoring systems. There are ways to do that by using heavy analytics, but this is not something that the organization necessarily has the capability to do internally. Mathematics, statistics, finding the optimal points, finding the thresholds, and setting up those thresholds to help you to get into the cases and the situations that's really worthwhile investigating. I've mentioned that I have the luxury to work with various central supervision authorities, such as central banks, financial intelligence units, and financial supervision authorities. One of the areas that I'm looking after in the financial crime space is what we call the capital projects. So basically, central supervision authorities do access donors. One of them is the Good Governance Fund, the European Commission, and so on and so forth, to increase their resilience to financial crime in general. So I'm working now with the central bank, specifically is the third step of that project, is actually the third project, where they will pick an enhanced platform to detect and be able to monitor fraudulent activity in their supervised banks, to monitor money laundering without replicating the role of the financial intelligence unit in that particular country, which financial intelligence unit has realized that has a downside in looking at suspicious activity reporting, and they went for a United Nations solutions, which is called GoML, and basically they will integrate that with the central bank and enhance the resilience as an economy to financial crime in general. Again, I'm referring to this because it incorporates from fraud and corruption to money laundering, sanctions, and cyber. So it's across the spectrum. Now, these institutions, and there are a few highlights, these institutions use a risk-based approach and assess all the sources that can be connected. So, for example, my central bank has a replica of all the SWIFT messages from their commercial banks. So that's one of the data sources. Now, they will put open source intelligence, they would put different systems that they have within some external commerce. They're not part of the European Union, but they have access to data coming from the customs and so on and so forth, to start to identify whether there is any suspicious whatsoever to manipulate the banking sector. The selection of adoption of new technologies, as I've mentioned, they went to private sector. So they're willing, central supervision authorities, they're willing to pay for systems and technologies to increase the resilience to financial crime, which is very important. New operating model, the review of the industry capabilities, I'm seeing, and I'm lucky enough to advise central supervision authorities in assessing the effectiveness of individual banks and companies when it comes to financial crime, using data analytics, the increase in regulatory compliance, and adopting better practices. Every single time we start a project with a central supervision authority or a financial intelligence unit, we're being asked to produce an initial report on international better practices. So things, for example, that the Bank of Bangladesh may have learned after the global payment fraud and the SWIFT fraud would be put on the table of other financial institutions. intelligence coming from industry players such as BAE Systems, for example, would also be replicated. So they know already what other institutions are doing, and they're willing more and more to incorporate that peer benchmarking, which is very important. Basically creating a wider approach and actually integrating themselves into the global landscape, accept and adopt industry-wide partnerships. As I've mentioned, there are private companies out there that are being more and more used to investigate and to help to build resilience for cyber. Incident response focus, seeing more and more concerns in that space as well. Now, when building a cyber resilient financial institution, it's fairly important to establish cyber risk governance and understand the cyber organizational boundary. So with other words, the foundation of a strong cyber resilient organization is a governance framework for managing the cyber risks. The second step is to identify the critical business processes and assets and identify the cyber threats. So running an integrated institutional risk assessment that is focused on cyber by incorporating analytics, and I'm going to show you in a second how that looks. And then the third would be to improve the collection, analysis, and reporting of information to be able to plan and respond. So in essence, what we're calling an integrated institutional risk assessment that has multiple layers and multiple facets, combines the qualitative. I have one client that unluckily, when we started the project, didn't know if they had cyber incidents. So basically they were doing an organizational fraud assessment and fraud program review, and they didn't know if they had cyber incidents. They didn't know, or the people in the fraud strategy that were also looking about account takeover, identity theft and other types of cyber fraud, didn't liaise enough with IT security and other organizational units that may have had information about such events. So basically what we've advised them to do was to grab the data and start to build a proactive risk assessment to identify the hidden threats that should be connected with the type of fraudulent or the taxonomies that they were seeing in their fraud strategy and fraud operations. So it was an integrated approach. So often the organization tend to stick to a qualitative approach, which is, do you have this risk? Yeah, I have this risk. I'm exposed. So this is the probability. This is the consequence. I have several controls, including an automated users behavior monitoring system. And I've demonstrated that if you don't optimize your users' behavior monitoring system, you have a problem because you get multiple alerts and so on and so forth. So an organization that is being asked, or a person that performs the risk assessment that is being asked whether you have a control in place to monitor the user's behavior, and they would say yes. And that would decrease the risk exposure, which is not necessarily true, because that system may not be effective. So in essence, by looking into the analytics and grabbing the data, and we're doing this every single time when we're doing our program compliance assessments, when we're grabbing the data, we're seeing a huge backlog or abnormal rules in place that have nothing to do with the proper monitoring of the internal system. So the point that I'm making is that always incorporating, and financial institutions are more and more concerned about grabbing all the data possible and trying to build a recurrent risk assessment to identify the hidden threats. Now, when it comes to maturity assessments, there are several areas of focus, amongst which the cyber risk governance, the cyber risk parameter, and the asset identification. As some of them, and the leading practices do demonstrate that when it comes to governance, this is built into the organization's day-to-day activities. When it comes to the risk parameter, the management program includes all material third-party relationships and information flows. When it comes to asset identification, the organization knows what data is critical, where it's located, and who has access at all times. So it's fairly important from a maturity standpoint for the organizations to understand where they situate themselves in relation to leading practices. Now, the cyber risk monitoring, the intelligence, and the risk management are also part of, or should be part of, a maturity assessment. And I always educate organizations that it's not necessarily difficult to build information about what other organizations are doing. So if you have a research team, you may come across better best practices that would help you to run your maturity assessment. However, if you want to benefit from your peers, then typically you would ask for external advice. Nevertheless, I always advise organizations that if you're not ready to invest, or if you don't want to go to external advisors, you should at least try to perform a high-level maturity assessment to understand where you sit. In the cyber risk monitoring, leading practices show that appropriate assessments of vulnerabilities to internal and external cyber risks are continuously performed. When it comes to intelligence, inputs from various functional teams and are viewed under common lens to quickly correlate and dynamically adjust the risk posture and respond to these threats in real time. We had a committee, business continuity management, information security, compliance, human resources, risk management. They were all sitting in one committee. We were reporting on a central basis the situations that we were exposed to. We were collecting intelligence and data from our technical committees that we were participating to as individual functions within that organization in a wider banking association, and we were pulling all these things together to become stronger. So this is one of the practices. It may not be the best one, but it's something that organizations should be looking at. Cyber risk management, the leadership has taken full ownership of cyber risk management and understand its vulnerabilities, controls, and interdependencies with third parties. And as I've mentioned, last but not least, the cyber and fraud, financial crime convergence. I think I've demonstrated enough that, or at least created the premises for you to understand that these crimes should not be treated separately. It's fairly important when detecting cyber to have a proper money laundering process in place. So someone in the management that is responsible for certain second lines of defense and so on and so forth, to see if there is convergence and if these teams are working together to leverage intelligence, to leverage knowledge, to leverage the information that are coming across from various authorities. So it's very important. And the example of my client that I gave you, when they didn't know if they had cyber incidents, it's again standing as a let's say not such good practice. So it's fairly important to look at the convergence between fraud, money laundering, cyber. So in essence, they should not be separated. The business and cyber benefits of the following online behavior and across the journey. So from the determination of the governance model to building the policies, procedures, and the processes, to performing the risk assessment as I described to you in a qualitative and quantitative manner, to building metrics and reporting, to be able to report to authorities, to be able to provide to authorities that the fact that they are concerned about the phenomenon and the way that they measure the phenomenon, and tools and technologies which are extremely important. And that is the foundation of building a stronger defense to financial crime, amongst which cyber. And by saying that, thank you very much for listening to me. I'm willing to take your questions. I'm willing to take your answers as well.